Hello and welcome to another market update after the market closed last week on the 21st of June. So here's where we look at the big picture for the overall stock market as well as the short-term picture. It's important to be aligned with that, to know whether we're in a bull market, bear market, don't get blindsided. And also we're going to look at a couple of other things that are going on over my shoulder and smaller markets, but also a bigger picture because there's some themes emerging now. Anyway, here's the S&P 500 over the last few years. You can see along the bottom here, each up and down peg is a week of action, smoothed out for us by these moving averages here, like an average over time with the 40 over 40 weeks, and the red line is over the last 70 weeks at any given point. So called the brand new bull market here and said to go to cash around here. Been in cash ever since, still waiting for a brand new signal. And instead of really pushing ahead and creating when the market got bogged down and was looking really, you could argue it in a way, even now it's still kind of a chug sideways despite last week's impressive and unexpected action actually. But it's still pretty flat. You can see the moving average here is, it's flat. That's not an uptrending market from an averages perspective, although it's looking healthy. The big number here, as I commented around here, is 3,000. 3,000 in the S&P 500 will be an important psychological barrier to break through. It's turned away from it twice before now, and it could be having another run at it right now. So it's important to see what it does next. If it turns away again from the psychological 3,000 mark, I don't think that'll be a good sign. Conversely, if it does break above, then we could be off to finally getting that brand new bull signal. Let's not forget though that fundamentals underpinning this are quite weak, and the market is defying gravity a little bit. Not to be getting in the way of that by shorting it at all. Let's look at the short-term picture now. See what's going on. See if we can get any more clues here. And here's the S&P 500. And what was discouraging last Friday is that it went down on, this was quite heavy selling volume here, this red line there, it went down on that. Not a good sign before the weekend. Traders didn't want to hold on to their positions, so we'll see what happens. It's an ominous close on the Friday, and the market is, fairly stretched right now. The other thing is volume-wise, that's in terms of the overall conviction behind this from the big institutions. We are not at a point yet where we've got a new high in volume. So there's some weakness under the surface here, and longer-term volatility is still quite high. So, and let's not forget as well, we're about, again, these are all those little, untalked about factors that we're about to enter July. And July and August are typically, historically, the most volatile months there are. So it's on the surface, it's looking healthier, but there's some, definitely some trouble waiting in the wings, but still remains to be seen. In other news, let's look at one of the emerging stories now. As I've been commentating on Bitcoin for the last several weeks now, this is blindsiding everyone. This is very impressive action, and it did have a great week last week. This is going to take everyone by surprise, and I think it's quite feasible that within the next 6 to 12 months, Bitcoin's back at a new high, back to its previous peak. It's pushed very, very impressive action here, as I've been talking about really ever since April, when it did its turnaround. Instead of going further down, it just pushed higher and higher. Here it is on the short term. It's what I've been commentating on especially, is this impressive boxing action here, there, and pushing out to a new one last Friday. That's Bitcoin is back with a vengeance. And it's still good. I think still good buying opportunity. I think it's quite feasible that this doubles or triples fairly quickly. And what's on the back? What's interesting is that on the back of this is that because interest rates weren't going up after all, this is affecting things, and gold is also back. Let's look at the weekly chart of gold here, and look what happened last week. Gold has been in a very multi-year sideways, very frustrating action, but on Friday last week, this massive shoot up higher, breaking multi-year resistance. You can see with that line there, and that's very important, impressive action by gold. And see what it does next. Look at the weekly, daily chart of gold. And there it is on heavy volume there, breakout, a gap up. That's a rush of investors to get into precious metals. There are stocks such as Royal Gold, for example, which is really just a gold royalty company, multi-years. There's that multi-year sideways action that finally broke out to new highs last week, and I think that's a very great opportunity with this one here. Also, there's just the overall gold miners complex with GDX, which is just a bunch of all the gold miners, all the big ones anyway. You can see here, sort of representative of that. And there it is. That's the miners typically lead the metal as well. So I think this is an emerging theme here. Precious metals are back, Bitcoin's back, while the market drifts sideways. So that is all for this week, and I will speak to you next time.